Learners, welcome to our session today. My name is CPA Ringo Frederick. I lecture at Mdarasa. And at today's session, I want us to go through financial accounting. And the concept that I want us to talk about financial accounting, it is the foundation, it is the backbone, it is the heart of financial accounting. This, remember, is one thing that will affect us even as we proceed with the course of accounting. And what I want us to handle today is something very interesting and very important, the concept of double entry. Double entry concept of accounting. Double entry concept of accounting. These are one very interesting and if at all we can say one of the main foundation or basics of financial accounts. So when we are looking at the concept of double entry, these are concepts in accounts that for each and every entry that we do, there must always be two entries. Any transaction that we're doing, there must always be two entries. And in this case, my good students looking at this concept will be looking at the concept of an account, which our account will always be having, of course, two forms. Of course, the left side, we normally refer to this as the debit, BR, whereas the right side will always be talking of it as what? As the credit, CR. So this will simply represent the two sides of the accounts that we'll always be having, so that at any given point in time, whenever we are having a transaction, this transaction will affect two components. It will affect two accounts. And certain account will be increasing, a certain account will be decreasing. A certain account will be increasing, a certain account will be decreasing. So there will always be that balance. And situations where these two, or situations where we don't follow this rule, then we say that these books are incomplete records. Okay? And for us to understand this concept, I'm going to have it in a very beautiful summary, which will always be able to remember. In the summary that Molimul wants to give us on this concept, it is the concept of Alice. I know you'll start asking Mwalimu now, who is Alice? I'll give you this concept, my good students. It will be our guiding principle anytime we are talking about what? Double entry. Anytime you read about double entry, then Alice will always be our guiding principle. So, Alice, this simply states that A, we start with A giving us assets, L giving us liabilities, excuse, I giving us income. These are, of course, our income. C giving us capital, whereas E giving us what? Expenses. Okay? So this is Alice. And if at all you're doing accounts and you don't love Alice, then you're in the wrong profession, right? Because this is a fundamental foundation of accounts. So Alice will guide us, and Alice will guide us in this case, whereby we've talked about debit and we've talked about what? Credit. So we have debit here and we have credit here. So at any given point in time, whenever we're having our assets, if our assets are to increase, we must always make sure that that has been recorded on the debit side. So increase in assets, we debit. Decrease in assets, we credit. Liabilities. Anytime our liabilities talk about decreasing, we do what? We debit. When our liabilities are increasing, we do what? We credit. We have the other point, income. When our income is decreasing, in this case, you'll always tend to do what? You'll always tend to debit. Whereas anytime our income is increasing or increasing, in this case, you do what? You credit. We have capital. Capital, remember, is the same as equity. So when our capital increases, in this case, we credit. And anytime our capital has an effect of decreasing, we do what? We debit. We have expenses. Anytime our expenses is increasing, we do what? We debit. And anytime our expenses is decreasing, we do what? We credit. So it will always be upon us to look at a situation so that, for example, I am paying for a certain expense, say like rent. Following double entry concept, we've said we'll be having two accounts, okay? And this rent I'm paying via cash or bank. So I'm having the bank account and you're having the rent account. Rent, it is an expense. So when I am paying my rent, it means that this is an expense. So it is doing what? It is increasing. So we do what? We debit. And what is happening to our bank? Bank, in this case, it is an asset. So what is happening? We are reducing our cash at bank. Therefore, we do what? We credit. And this is what we're looking at here. Double entry. Yeah? For every debit entry, there must be a credit entry. So, in this case, we are following the principles of double entry. I am introducing capital to the business. I am introducing capital to the business. And in this case, I am introducing some cash. So, if we are introducing capital, it means that capital will increase. So, we do what? We credit. And where is that amount going to? That amount is going to the bank. So therefore, bank being an asset, in this case, we debit. Exactly following Alice. Following this, of course, direction. The same case, this will also give us a summary of the trial balance. Alice will also give us the summary of trial balance, because now trial balance is simply the summary of all these accounts that we've opened. It is a summary of all these ledger accounts that we have opened. So my trial balance, my good students, will be as follows. These are trial balance. A trial balance will always be having two columns. The first column is the debit column. The second column is the credit column, which, as at the end of the day, the trial balance must always tend to do what? Must always tend to balance. So here we start again, following the principle of Alice. So in our trial balance, all assets will always be on the debit side. Assets will always be on the debit side. Liabilities will always be on the credit side. Remember, the guiding principle is Alice. The guiding principle here is Alice. The guiding principle is ALICE. So we're saying that in our trial balance, in this case, where we are having all our assets, of course, will always be on the debit. All our liabilities will always be on the credit. Very important to note. We have our income. Income in this context, anytime you're having your income will always be recorded on the credit side. Whereas whenever we're having our capital, still capital will be recorded on the credit side. When you're having our expenses will always be recorded on the debit side. So that as at the end of the day, my good students, in our trial balance, the debit side must always be equal to the credit side. This will confirm that the double entries were done properly. This will confirm that the double entries were done properly. So this is a simple concept of double entry. There's nothing hard about double entry. This is a basic, simple concept. Just remember who? Alice. Just remember Alice. And at this point, of course, we have beautiful classes like this on our platform. All you need to do is to go to app.mdarasa.com. You create an account there. After you've created your account there, you select the course that you want to select. We have so many courses for accounting majorly, and of course for the future of accounting, like Power Business Intelligence. We have courses, of course, QuickBooks. We have tax training and advanced Excel. We have Excel and so many other courses which I'm very sure it will help to boost your career. It will help to boost your career. So just go to app.mdarasa.com. You create an account there if you don't have. So I was the instructor CP Aringo Frederick. In our next class, I'm going to guide you on a summary on the concept of depreciation so that you must all have this knowledge and information. To this point, guys, thank you so much. See you in our next segment. Bye-bye.